Good morning, everybody. Welcome to the 1Mby1M Strategy Roundtable for Entrepreneurs. 1Mby1M, as you know, is the first and only global virtual accelerator for technology startups. Our mission is to help 1 million entrepreneurs reach $1 million and beyond in annual revenue. In support of this mission, we've been doing these free mentoring roundtables for year after year after year since 2008. This is the 588th session, so sometime this year we're going to hit our 600th milestone, and this is the last one of the summer of 2022. We actually have been present all summer long with no break almost. Maybe 1 week we didn't do it. The event is being recorded. Every single recording is available on our YouTube channel, and on Twitter, you can follow us at 1Mby1M and at Romana, and today's hashtag is 1M1M. These are the call-in instructions. Right now, we have scheduled programming, but I will open the line up for call-in later. We're going to start today's session with a return guest, Yanev Suissa, Managing Partner and Founder of SineWave Ventures. Yanev, welcome to the program, and I know you are on vacation. I know a lot of people are on vacation at the end of the summer, so we'll do a short one today, but nonetheless, we're here, and we look forward to chatting and catching up.
Well, Shramana, you know I like speaking with you, so it's never work. So it's great to talk to you and great to see you.
So you have some news. So somebody from your organization actually reached out to us, and we said, oh yes, let's have him back. So let's first catch up on your big news.
Yeah, sure. So we did big closings on our third fund. Our performance has been top 5 percentile in the industry. So we've been doing a great job, and so things have been chugging along at SineWave. We're really excited.
And what is the size of the third fund?
The third fund, we're in the middle of kind of the first closing and the final closing, but it'll be around 150, I think, in the end, 150.
150, okay. Well, since you've been doing this for some time now, and we've already had a conversation, why don't we start with some of your big successes? You have good performance, you're raising a third fund, so let's start with the case studies of what you have been successful with. And as you are telling us the stories, tell us about how these people came to you, the entrepreneurs. When did you meet them? At what stage? And what was it about them that caught your attention to begin with to decide to invest?
Yeah, absolutely. So I'll break that up into little parts and kind of go through it, and feel free to interrupt if you have questions, Shramana, along the way. But so at SineWave, what we do is we kind of own our own swim lane in venture. We're a little bit different than other funds. What we do is we invest in commercial enterprise tech, so data, cloud, security, systems, infrastructure. So as I go through the examples, you see most of our companies are of that nature, right? And we help open up a commercial vertical. So these are like baby Microsofts, not baby Lockheeds, but they can also be big commercial companies with public sector revenue streams that make them bigger returns. So among the ones that we have a very concentrated portfolio. So we only do about 4 or 5 deals a year. So a little bit different than some of the index fund models of venture. And so we're very picky about how we find those deals and how we select them. So among the ones that I could talk about early now have been big successes, and we invest seed A, B, I should say, so all early stage investing. So a lot of people know Databricks. They've been in the news recently again, and so they're kind of always in the news with the Snowflake, Databricks, and now Teradata kind of popping into that world a little bit. So they're expected to be one of the biggest tech IPOs ever. So we're in Databricks early. Another example, SentinelOne, which was the biggest cyber IPO ever, is one of our early stage investments. They went public earlier in the year, and so they've been doing fantastically well. We also had a physical security company called Evolve go public. We have another company, Rescale, that's on a public path. We had an acquisition in jump bikes, and our Fund 2 companies are doing really well as well. We have a thermoplastics printing company called Aeon 3D that's really broken out of the gates. And in the agriculture vertical slash, some people would also consider it having a climate tech impact. Cloud agronomics is also kind of doing fantastically well as an early stage business. So those are some of the examples. And then how those deals have come to us are really all different ways. You know, a lot of people think VCs just share deals with each other, and we do, but it's usually less from that vein because you're usually not always showing the one that's the best because you want to keep it to yourselves, right? So, so I think most of our best deal flow comes from other entrepreneurs who we've invested in, or some of the corporate and public sector relationships we work with. So as part of SineWave, we have partnerships and relationships with some of the big Fortune 500 and also the government agencies of all different types. And we use them in diligence. We talk to them about theses. We talk to them about where their businesses are going. And so they will often say to us, hey, we've seen this great company. We've seen that great company. That's actually how we met SentinelOne. We had a thesis on endpoint security before it was popular. And the CTO at Defense actually said, you should talk to this company, SentinelOne. I've never seen anything like it. I agree with your thesis. So SineWave is a very thesis-focused place, which I think helps us narrow our universe, right? We have a vision of where the world is going to be in several years, or where we want the world to be and think it will go. And then backtrack from there to say, okay, what are the foundational technologies you need in order for the world to operate that way, right? And so we target, you know, an endpoint security thesis. We found SentinelOne actually in that case through Defense. We targeted a real-time streaming analytics thesis, which was post, you know, at the time back then when we did Databricks, it was all kind of data at rest, right? Not streaming real time. So we're looking for that. And that deal actually came to us because Databricks was trying to do a deal with the intelligence community. And they were speaking a different language. And so both the intelligence community and the VCs at the time said, you should talk to SineWave. So that's how we got into Databricks, for example. And so I think the most important part, though, for your entrepreneurs and your listeners, who I know you've worked with over the years, especially at the early stages, is to really build that relationship pre-financing. Sometimes it happens during the financing because things happen quickly, right? But to really get exposure to how does the entrepreneur think? Are you on the same wavelength as for vision of the company, right? Is this a defensible technology? Can it distinguish itself beyond that from a market product perspective, right? Is the entrepreneur coachable? Are we as VCs going to actually be able to help you, right? So that we could make the investment get across the finish line, right? Those are kind of key questions we ask whenever we meet an entrepreneur.
So let me ask you a very specific double-click down question on stage. So when something fits your investment thesis from a sector point of view, what do you want to see in the company when you're doing a seed investment? What is the earliest stage check that you're comfortable writing, and what do you want to see? Do you want to see paying customers? Do you want to see a certain MRR, ARR? What is the desire these days?
You know, it's funny. A lot of these firms have these, like, what I would call nonsensical rules, right? You've got to have this much in revenue. You've got to have this many users. I really think some of that is indicative of how a startup is performing and what price is, right, in terms of valuing the deal, right, for the financing. But I don't think it should be a barrier whatsoever. But for us, our seed deals, our earliest stage deals, and I know now what seed is and A is and B is kind of all morph sometimes today. But our seed deals, it's not pure tech risks in that there's usually a product already developed. It may not have all the features. It may not be at scale. It's an early stage product, but it is deployed in some way so that you can test it and play with it, and companies could use it if they wanted. We look for, obviously, foundational technologies, fantastic team. But the other kind of key characteristic that I think also narrows that down is we look for someone to have either, they could have a customer. More often at the seed stage, it's partners that they're working with, big corporate partners in their business or public sector partners in their business line, or a design partner, what I call kind of a design partner, which are these entities and these big kind of companies and agencies that will work with you, knowing that, you know, your tech's not perfect, but when it does get perfect, it's going to be great for our business. So we're going to experiment and put in sweat equity with you. Those are kind of the things we look for in our seed deals. And so that's, it's not the pre-seed where it's kind of just someone in a room is not so much what we do, but the seed where you kind of have developed something and are trying to figure out now where it goes in the market and how to grow it and how to build the tech, that is comfortable for us.
And only enterprise and government customers, yeah?
Yeah, so in fact, our companies always have to have commercial customers, but often do not have government customers. We actually don't like things focused on.
You don't like
We
government
don't
customers?
like companies that look at government as the first vertical or commercial success, right? We want them to be working with commercial Fortune 500 types or regular business customers, and then we will help on top of that open up that vertical. So kind of like Databricks, where their first sets of customers were industrial and healthcare, and now they have a big public sector business that we help them build. That kind of example.
Now, what about geography? Are you still everywhere?
Yeah, you know, interestingly, geography is another one that VCs tend to have a somewhat irrational perspective on, although there is some logic to geography. Our geographical centers, by the nature of being an enterprise tech firm, right, are typically Silicon Valley, Israel, and Boston. You have some in New York, some in Austin, Texas. You know, there's different pockets where we have sourced deals and done deals. We're actually about to do a deal in the Research Triangle in Raleigh-Durham. So I think there are different places where deals are. And we have one or two international ones, but most of our deals are certainly focused on the US market to start. And are primarily domestic deals. Some of the nature also of working with the public sector, you can't do deals in certain countries, right? Like, so we couldn't do a deal in China, as an example, in order to open up that market for our startups. But I do think that the reason geography matters to some extent is, from a high level perspective, you want to make sure that the talent and the resources for building, you know, the financing, quite frankly, for building that business is, you know, around that orbit, right? But for us as SineWave, the most important thing is, can we actually come into your office and work with you and be with you and help you build, right? I think the most meaningful relationships a VC builds with an entrepreneur and the most impact in a positive way that VC can have on an entrepreneur is by digging in, right, and becoming part of their team to some extent. And so for us, as long as we can get there by a plane in a reasonable time frame, we are happy to make an investment.
Mm-hmm. You know, there's been a distinct trend. I came to Silicon Valley in 1996, end of 1996. So it was very much your point of view at the time, right? People wanted to invest within 5 miles of their location in Silicon Valley, and everything else is outside of their orbit. But it's been a really interesting evolution of the trend. And part of what we are seeing a lot of is people building their larger development centers elsewhere outside of Silicon Valley, just because they cannot compete with the talent war, they cannot compete with the cost of living. That's one driver, but there's another big driver, that is, there's a lot of technology development, including enterprise software technology development, including AI and data stuff happening elsewhere. India has been incredibly productive. Europe has started producing a lot of interesting enterprise companies. So global, you know, they want global customers and they want to set up shop in the US, whether it's in Silicon Valley or Boston or wherever. European firms often prefer the East Coast just because of the time difference and the quicker flight time and all that. But we are seeing these kind of, you know, a headquarter maybe somewhere in the US, in one of the US capitals, and then the rest of the team somewhere else. Is that a model that you are okay with?
Oh, yes. So we've never been a 5 minutes away firm. I grew up at NEA as a VC, so was at New Enterprise Associates for many years, as you know. And we were always bi-coastal, right? DC, Silicon Valley. So it never really fazed me about geography. As I was joking with you earlier, I live on a plane. So it kind of is the reality of a VC's world. I do think you're absolutely right, by the way, about seeing the development teams being built elsewhere, and more of the kind of business or sales teams or product teams being in the US. I've seen that breakdown quite a bit. Sentinel-1 was like that for many years and still has a significant element of that. We're actually looking right now, I think we're about to do an investment in a company from India that has their development team in India and is now building their business team in the US. And so I do think that divide is totally comfortable for most VCs. I think the one thing that I don't think we've gotten to yet is a lot of the venture funds have not figured out how to set up shop effectively in other places. So often the outreach needs to come inbound, right? So from those other places, if entrepreneurs can use their networks and reach out to folks in the US, I don't think there's necessarily no, we can't talk to you, you're not in the United States type of thing, or you're not in the Valley, or you're not down the block. But I think the outreach of, kind of being in those ecosystems and environments is hard to do, right? To be in too many ecosystems at once. So some firms have franchised, some have built satellite offices, some have tried to just expand their existing offices, some with success, some without. But I think that the trend of seeing these companies that are global and international is definitely true. I think your insight is correct.
And there's certain corridors that are very well developed, right? The Israel Silicon Valley corridor has always been extremely well developed and it works very well. The India Silicon Valley corridor is very mature. There are firms that specifically focus on bringing people through that corridor, and India starts, but then global market, Israel starts, but then global market. These corridors are very well developed at this point, I would say.
Yeah, I think they operate a little differently though. Like, so for India, I find that a lot of the firms set up a firm. They have an office and a satellite office, for example, in India, and an India team, most of the firms. In Israel, there's a little bit of that, but most of the VC funds have pulled back from having their actual own offices there, yet they still hunt there, to your point. So there is definitely a stream of deal flow and relationship and communication between the geographies. I think that's right. And so as those ecosystems change, VCs adjust, right, to be able to work with the best entrepreneurs.
Yeah. Now, how is your thesis evolving as we are? You talked about SineWave being a thesis-oriented fund. You have, found deals aligned with your thesis in the past and have had a lot of success. What about looking out? What are you looking for?
Yeah.
That would be a good indicator for our audience to understand what kind of things you're looking for.
Yeah, so our thesis has always been foundationally the same, in that we're looking for ultimately a data-driven decision-making world for large enterprises. The government to us is just another set of large enterprises. So what gets you there? And the thesis evolves within those different parts as you go along, right? So for example, in Fund 1, we were looking for the next generation of cybersecurity, which was endpoint, which is why we bet on Sentinel-1, which has now become the paradigm of the day for security. We don't actually see, however, going into Fund 3, that next paradigm having emerged yet, actually. There is some talk about it. We haven't seen anything real in our opinions. So we actually view security as becoming part of a systems-based approach to technology. So when we look at a network company or a data platform or any communications platform, security needs to be part of that, right? Not an add-on or an independent company. There will be still great independent security companies, but for what we're looking for, we think it becomes more system-based. We're looking a lot in the supply chain space. We think that data security systems will be incredibly relevant there, and has always been, but is particularly top of mind nowadays. But I think the biggest trend we've seen at SineWave that's been a huge advantage for us is typically VCs will tell you they invest in platform technologies, right? So technologies like a Sentinel-1 or a Databricks, where any company could use it. Doesn't matter what sector you're in or business you're in, it applies to everything. We still do that. That's a huge amount of our portfolio. Yet we also at SineWave are very comfortable going deep on the vertical side of things rather than just horizontally. So I think you could build multi-billion-dollar businesses in verticals that aren't as familiar to the Valley sometimes, right? Like agriculture, Climate tech is now one of those verticals that has emerged. Insurance is one a lot of people talk about. Manufacturing, right? And how you do physical, cyber physical systems and infrastructure technologies. Those are areas where the Valley's not as well, plugged in or connected, but these are huge buyers and huge companies. So Cloud Agronomics, for example, that I mentioned earlier, Shomana, they are a vertical company up and down the ag tech stack, right? So they can help you analyze soil and agriculture over billions of acres in real time. They can help you understand the carbon sequestration in your particular land, right? And so they do a lot of different, they could talk about yields for the financial community. So they're able to do a lot of things in one particular vertical well. I think that is also a unique part of our thesis that we see becoming even more and more relevant, because you can't just apply the same thing. It's trying that you can't put the same key in every lock, right? And some of those locks have very big prizes behind them if you can figure it out.
Yeah, this is something we're watching very closely and doing a lot of case studies on. Part of the issue is that to build a solution for a vertical that is, esoteric to the Silicon Valley technologists, you need domain knowledge, right? The metadata, the heuristics of a domain like soil analysis. A Silicon Valley engineer doesn't have that domain knowledge to even frame it. If somebody else who has that domain knowledge frames it, then the engineer can do the plumbing of it, but the actual domain knowledge, the vision of what problem needs to be solved and how, that exists in the head of people who probably don't really know AI or know technology. How are you seeing this gap being bridged in the vertical cloud space?
It is a great question, and it's the right question. And that comes down to team. And you're absolutely right. You need to find teams that have merged technologists with business people who are in the field, right? So people who understand that dynamic. So one of the things we loved about Cloud Agronomics, which is now called Perennial, is that they had the agriculture business folks combined with the brilliant technologists of the Valley type, profile, let's call it, right? And so putting those two together was able to be very effective. It's one of the critiques I've lodged against the, not against, but about some of the blockchain technology we've seen, right? One of the issues with blockchain, or had been, we're actually looking at a company now, we just issued a term sheet for a company that uses blockchain as part of its solution. So we do like the concept and the technology, but you have a lot of, 21, 22-year-olds who've never worked in a business ever, claiming to create products for, large industrial systems and companies that they know nothing about how they work, right? And so you've only recently started to see a maturity level where you're bringing in deep, deep people with vertical business experience alongside these innovative younger technologists who know this new space and know how to build around it. And that's when exciting companies pop up rather than kind of just, fads of the day.
Bear with me if I pursue this a little bit further. This is kind of top of mind for me right now.
No, go for it.
How do these teams come together, right? How do you put these kinds of expertise together, right? These like hardcore AI expertise, deep tech expertise is not sitting inside the manufacturing company or the ag tech or agricultural company's weeds. So where is that domain expert meeting the high-tech expert and coming together with a company?
So a lot of this has to do with people and networks and relationships, right? So people always ask me, the government, you can't know everyone everywhere, right? Like that's kind of a basic premise of relationships and networking. We have a bunch of relationships across most, the Fortune 500, the government entities, there's lots and lots of folks, but you don't know everyone. The way you access everyone and link to everyone is by knowing the key nodes, right? The people who are those innovative thinkers in these places, the ones doing the outreach, the ones trying to solve the problems and find and recognize, I don't have this in my organization, I don't have this DNA in my organization. How do I find that, right? And so they're the hunters, they're the forward thinkers, they're the early adopters, right? And there's usually a few of those in any one organization, right? Not a ton, but there's usually some, right? And so making those linkages and understanding who those people are is, I think, how you get things done in these spaces. So for example, if you're a agriculture head of whatever, maybe you're the chief data scientist you're the head of data or analytics for an agriculture company, or you're responsible from a business perspective of managing yields and understanding, quality assurance, for example, things like that, then you are more likely to do, and if you're one of these innovative nodes who knows how to work across your organization and with the broader ecosystem, you may be reaching out to different technologies you see developing where that's happening, right? I think that is, those linkages are hard to find. You're absolutely right, which is why there's only so many great deals, which is why we only do 4 or 5 a year rather than 300 a year. But finding those linkages is where the kind of secret sauce comes in.
And where are you looking right now for what verticals do you think are underserved, where you think such large opportunities exist? What kind of verticals are you looking for at the moment?
Yes, so we've made a few different bets we have a bet in the ag tech space, like I mentioned. We've done a few in the health insurance space and the health tech space. We are, I think, more increasingly looking in the manufacturing and industrial spaces. We really like the thesis about we think that we think that cyber physical systems is an interesting place, so software as it applies to real life hardware and things, and how you deal with the
Internet of Things kind of
IoT,
stuff.
Internet of Things, yeah. But in specific spaces, I think robotics elements can be interesting, more of the software play than the hardware play there. But I think that's an interesting space as well. So these are some examples of the different verticals. And then, of course, we still do look, and I would say, a good like 60–70% of what we do is the platform plays, like apply to everything. But understanding the verticals on top of the horizontal platform concept allows you to help those companies hone their business use cases to different places, right? One of the things, Databricks, for example, every company, even the big rocket ships like Databricks, learn things over time and have bumps in the road, right? So Databricks as a horizontal platform applies to everything, and they had customers across everything. And about midway through their life cycle, realized in order to really be the most effective company, we need to streamline this in order and really make sure we're servicing a particular vertical exceptionally well, and go from vertical to vertical as we grow, without necessarily sacrificing the other ones, which they never did, right? They kept the other ones, which is why they said, all right, what are the ones we want to hone first? And so they honed industrial, healthcare, and public sector, and they continue to hone more and more verticals. I think that for your entrepreneurs on the call is an effective strategy, right? You want to be a platform, but you want to focus. This is where the pivot concept of focus on one particular element, doing it well and doing it great, and then move to the next. If that didn't work, then move to the next, right? You always want to have a next, but you don't want to boil the ocean all at once.
Right. So the other, in what you said, the other trend that we are tracking quite closely, and you may have seen my writings on this, is platform as a service, right? SaaS. So in this category, in this sector in particular, the data platform, data and analytics platform, it makes a lot of sense for a number of very significant SaaS companies to emerge. And as you said, it has to go to market as a vertical solution. It's hard to go to market as a platform company to begin with. It has to go in as a platform company. But since you have companies that are mature, what is your analysis on at what point can a company that is doing vertical solutions in specific verticals switch to being a platform company, and what have you seen work?
Oh, well, I think platform companies apply to verticals. So I think you can have a platform within a specific vertical, a platform as a service company. In fact, I think that's really important, because I think you need to understand, and this is key for every entrepreneur, and I think probably one of the biggest challenges actually for technologists and innovators, is how does this platform, with all of its many solutions and features and opportunities, actually work in your day-to-day business, right? A company doesn't, this is something we train our entrepreneurs in when we're bringing the Valley to the public sector. The Valley is all about what you could do and all the experimentation and all the vision, whereas the actual enterprise customer and the government, in the case when we are often working with them, want to know this is reliable, usable, deployable now, right? And it's going to solve this problem that I know I have now. if you
right.
go in and try to, it's a really, I think it's not the best strategy to go in and think that the customer is not going to be creative with you. I think that's very rare. It happens sometimes. That's what design partners are for. But it's rare that the customer is going to be creative. They're going to say, wow, this is an amazing platform, and it was a nice
Right.
meeting,
They
and it
want to
goes
solve
nowhere.
problems. They want to solve problems.
That's
Yeah.
exactly right. So these platform companies, whether, I think the ones built based on a vertical are particularly exciting because they understand the specific problems. And so to part
Right.
of your question as well, Shramana, the ones that are across many verticals, I think struggle until they can hone those vertical specific applications of their platform. And that's how
Yeah.
you build. And once you land one of those particular applications, then you could say, hey, we also can do this for this other part
Right.
of your business. And that's how it grows and expands.
So in the early stages, we don't recommend companies to go position as a platform company at all. Even if they have a platform, they kind of need to find a problem to solve with that their platform offers particular defensible edge in. But let's say a Series C company or Series D company or maybe a post-IPO company can look at starting to do a full-fledged PaaS ecosystem, developer ecosystem. And there are two things we see. One is the system integrators have the domain knowledge and they take the platform and go build other solutions on top. The one that really excites me is platforms that work with startup ecosystems and have startups that have domain knowledge built solutions on top of that. And of course, there haven't been that many companies that have succeeded in doing this. Salesforce is the classic example. Viva came out of the Salesforce.com ecosystem. Velocity came out of the Salesforce.com ecosystem. There really are maybe a couple of companies, Twilio and Atlassian, that is doing a successful PaaS strategy in that sense. We haven't seen a lot of, startups that are vertical cloud startups building on other people's platforms quite yet as well. But I think that is a wide open opportunity for vertical cloud.
Yeah, it's interesting how this space will evolve. I think that we've had it in a different form, right? I think AWS's marketplace, right? Azure's marketplace, those are that concept. That's what they were founded on.
It's that
right?
concept, but it doesn't have the full stack of.
Correct.
It's more
Exactly.
it's a layer below, right? It's a
Exactly.
more
And so
infrastructure layer.
yes, and that's what I mean by, we're seeing how that interim layer develops, right? And I think that could be exciting. And I do know that there are several well-known startups that are a little later stage that are starting to experiment with this. And I think that is definitely an interesting space going forward.
Yeah. All right. Well, you are on vacation, so I will let you go and enjoy yourself. It was great talking to you. Thank you for coming, and we'll talk later.
Thanks, Shramana. It's great to see you, and good luck to all the entrepreneurs on the call. Wishing you the best.
Bye-bye.
All right, be safe.
Folks, we can go to Q&A next. I know I see some people who want to ask questions. Let's go to Q&A next. Maureen, I think Babar Khan wants to ask questions in audio. Go ahead. And please go ahead and introduce yourselves and, ask questions, whatever you would like. Babar Khan says, software engineer, 2 years experience in web development. I'm totally new to the startup ecosystem, but first thing I want to know is what is the first stage for startup idea holder? According to my search, transfer the idea into paper. Then again, there is a question in my mind, what's the proper procedure and template for documentation? Kindly give me the opportunity to ask my question in audio. So Babar, I will answer your question. We do a complete validation exercise. When you have an idea, the first thing we do is a validation exercise. So I will explain to you in a moment how to use the 1Mby1M program to develop your startup. And in there, you will see that our if you have an idea, the first thing you have to do is validate, and validate with customers. And we have a whole module explaining and teaching you how to validate an idea. And it could very well be that your idea will invalidate. This is why we run a validation exercise on a startup or any startup idea. So if it validates, great, then you put the next step and the next step, and it's all, we kind of guide you through that. But if it invalidates, then you go back to the drawing board and come up with another idea. And we also have ideation exercises. We teach you how to ideate. Ideally, if you have horizontal, we were just talking a lot about vertical cloud and vertical solutions. If your primary background is in horizontal software development, you will need to find a problem to solve that applies to a specific segment of people. So unless you're solving some sort of a DevOps kind of problem or something that is a pure horizontal problem, which also works, that's also another way, but you have to start with a problem. So hopefully your idea, the idea that you've come up with, solves the problem. I'm happy to chat with you more about it and give you more specific pointers, but validation is your first step. It's, putting your idea on paper or not is, less an issue, but you have to kind of go through. And I'm going to point you to a few resources in just a moment. So why don't we do this? I will explain to you how to use 1Mby1M, and then you ask your questions in that context, okay? So we have everything available online, wherever you are, at your own time, at your own schedule, from wherever you are, you can access the 1Mby1M resources at the website 1Mby1M.com. There's a blog that I strongly encourage you follow, especially if you're, new entrepreneurs. It's a great blog to learn from. The Entrepreneur Journeys book series is a possible learning starting point for you. There are 12 volumes of case study-based books. You're basically immersing yourself in the case studies of the journeys of the various entrepreneurs. In each of these books, there are 12 books. Each of these books has 12 to 16 case studies. These roundtables happen every week. You're very welcome to come to these roundtables as much as you want. The premium program is our full acceleration program. You get extensive methodology guidance. You get access to the curriculum. The digital curriculum is over 3,000 hours worth of curriculum. And it's organized in a way that you can very efficiently learn what you need to learn about startups. So how to build a startup. So if you're new to the startup ecosystem, this curriculum is a fabulous place for you to start. In the premium program, we also do business development work, and we help you with this kind of strategy consulting. We will give you specific project-specific feedback on a weekly basis in the premium program. And then we help you with financing. You have to get ready for financing, and we get you ready. And if you have something that is fundable, we'll send you to investors. We work with thousands of investors. This is a tool, Babar, that you should go take a look at. It's available for free on the website. It's the 1Mby1M self-assessment. It has a series of questions, and you're going to have to answer these questions to validate your business and see if it makes sense. And I also recommend, if you're new to this, or for anybody actually, I recommend our bootstrapping course. This is another free course that's available on the website, and it's on the blog. It's less than 1 hour, but it's really concentrated guidance and wisdom on how early stage startups should work. Another body of learning material is our set of Udemy courses. There are 31 Udemy courses that you can get going with, and they deal with various different aspects of startups. So, and they have a lot of domain-specific nuances. So go take a look at those, and that could also be a starting point for you, very reasonably priced courses. And if you want to access to the entire 1M curriculum, 1M Basic for $99 a month may be your best bet, and you can just get started, with learning. Learning is really important. Our whole program is predicated on the premise that you have to learn how to put one foot before the other. And if you don't invest in that learning, you're going to make a lot of mistakes, and you're going to get you're going to spin in place, and you're not going to move forward. So this is important for you to figure out a path of learning. This 1M is one path of learning. There are others, but you have to key into one path and then execute on your learning program. So go to the website, look around, premium program, basic program, FAQs, video FAQs. We have the full description of the curriculum available. It is a case study-based curriculum. We have thousands of successful entrepreneur case studies, and you learn from them. You can learn, from those sources. So, Babar, it's great that you have gone through the how to come up with a startup idea case study. Now go do the how to come up with a startup idea, the full course. It's just one case study, but there's a full course on it. Or join 1M Basic and start learning through that. Any of that is fine. If you have done the Udemy course, the full startup idea Udemy course, that's great. So you know some of the mechanisms of how we are teaching, but just immerse yourself in the learning. You can do it on Udemy, you can do it on 1M Basic, your choice, but just get moving on the learning. The investor introduction policies are stated very clearly on the website as well. Please understand the concept of investor entrepreneur fit. We also have a series of Udemy courses on how investors think. Understanding how investors think will help you figure out how to get funded, and we will help you in that. Our philosophy on investors is do not go to investors as beggars, go as kings. This is a cardinal rule in how to increase your chances of getting funded. So you have to keep this in mind. There's a whole course, bootstrap first, raise money later, and then there are various courses on the nuances of bootstrapping. So that's it. There are 4 more roundtables in September, so come back and talk to me as much as you want to. You can pitch once for free, and then if you want to pitch every week and kind of strategize and build up your strategy on a weekly basis, 1M Premium is your best bet. You get the weekly mentoring through that program. So we can go back to Q&A. Babar, you're welcome to use the audio to ask questions, and whoever else. If you have questions about the program, contact Irina Patterson, irina@1M1M.com, and she will be happy to get on the phone with you and walk you through your questions, help with decision making, etc. So, anybody else? Any other questions? Babar, how did you find the Udemy courses? How did you find our Udemy courses? And where are you located? Anybody else in the room, please also tell us how you found us. How did you come here? With what intent? Babar has given us some of his intent. I'm very interested in getting to know all of you, actually. Anybody? No? Nobody else wants to interact? All right. In that case, I'm going to adjourn the session today, and I look forward to hearing from you. And, if you decide that you want to work through the program, please start learning. I've given you a lot of resources to learn from, and hopefully you'll start learning through them. Talk to you soon. Bye-bye. Thanks for coming today.